There we go. All right. And once again, like I said, if my mic goes out at any point, just let me know and I can just take it off. I'm just trying to do it for a little bit clearer audio. But today we're going to be talking about entries and exits. Now, I'm not going to try to make this super long. So I know everybody like to enjoy their Saturday. I know I do, but I do want to make sure that it kind of makes sense. So if any point in time something doesn't make sense or you have a question about anything, feel free to do the raise your hand thing or drop the question in the chat. And we kind of backtrack a little bit and see if I can help you out a little bit. But today is all about entries and exits. Now I'm gonna be speaking more so from day trading side today. Because you guys see like in the chat, I do a lot of day trading. Not as much swinging lately, but usually the swing setups have really just been one type of setup and it's been working like almost every time the past 5 6 months. But we're gonna talk about day trading entries and exits today. And let me do my should do the camera. All right. So since I said we aren't gonna have like a slideshow, I'll plug the camera because it makes it a better conversation. I have to hold my mic because I don't know what's going on, but the clip isn't staying on. But basically, when it comes to the entries and exits, first thing you have to understand is why are you even entering to exit? Okay. So we're gonna come at this from a couple of different angles today. We're gonna talk about number one, what is a stock that you want to enter on? Okay. Now that's super important to understand because a lot of things that I tell you guys is I want you guys to be able to do this without me. And I know we all think differently, but the methodology behind everything is the same. Number one, you have to always keep the basics in the forefront. Okay. If you don't have the basics down, you will not understand a strategy. Okay. Strategies are nothing more than a compilation of basics. So, what basics do you need to know? You need to know number one, you have to understand option contracts. All right. Understand option contracts. Number two, understand candlesticks. Three, time frames. Four, let's see, support and resistance or key levels, which I call it. Five, chart patterns. Six, trend lines. All right. Six things. Six things. If you can understand those six things, you will be able to trade because every strategy is a compilation of two or more of those six things. And the thing about it is, the more things that you have on your side telling you that the stock is more likely to do this than that, the higher chance you have of being right. You have to shift the mindset of your trading from I have to be right every trade to I have to execute every trade that looks like this. I say that again. You have to shift your mindset from I have to win every trade to I have to execute every trade that looks like this. Okay. And the thing is, if you have a set of high probability plays, you keep taking those. They're not going to win every time, but the probability is in your favor. All right. Think about like these sports books, right? So for the people that sports bet, there's a reason that they're in business and they can pay out those huge payouts that they claim that you have a chance to win. They know that the odds are in their favor. They would never, ever go into a business where the odds aren't in their favor. We have to think the same way as traders. We have to put the probability in our favor. So how do you do that? You have to have the most things that can add up to tell you it's more likely to do this than this is going to put the probability in your favor. All right. So when you have those setups, you have to keep taking them. So the question that you're going to ask is, well, what are those setups? The high probability plays that I use, right? And these are trades. If you going back in my chat or any of you that's been in here for any amount of time, you will know that I've been trading the exact same way since I started. The the exact same way. The method of entry is different, but the exact same methodology is the exact same way that I've been doing it since 2015. So I've taken thousands of trades, right? So I've taken thousands of flat patterns, thousands of triangle patterns, thousands of breakouts. Like I can't even tell you how many trades I took, but I can tell you that if you stay with this methodology that I'm going to tell you, you will be more successful. Okay. So the why behind the trade is everything, as I mentioned. You have to put probability in your favor. The highest probability plays that I've seen, all right, that I've seen with my experience is chart patterns. Okay. Now, this is the thing that's different from when I first started trading to now. Now, when I first started trading, I only entered on things that I seen a pattern on. But now, as I've matured in my trading, I don't enter off of patterns anymore. Not nearly as much as I used to. I may still play a bull flag. And I'm speaking of day trading here. I may enter a play based upon a bull flag or a bear flag, something like that at times. But most of the time, I don't now. I have a different way of entry. Okay. The chart patterns are most useful when you can use it to give your play probability. All right. So if anyone's in here that took the last mentorship that I had, I really drilled home probability and the importance of that. Okay. And a um kind of a analogy or visual that I always talk about is you have to be able to look from the mountain down to the field. And you may say, what does that have to do with trading? Looking from the mountain down to the field is top-down analysis. Think about if you're on the field and you're trying to see on top of a mountain, you're not going to hardly be able to see everything. But if you're looking from the mountain down on the field, you will have a clear view of what's going on. That's what you do with top-down analysis. So when you're looking at the charts, right, I always like to start with that daily and 4 hour time frame. And the reason that I do that is because you find your plays here. You enter them on a smaller time frame. Okay. So the best types of plays that I like to find are flat patterns, triangle patterns, and level breakouts. Now, this is what people don't tell you about these pattern plays. The best way to play a stock that has a chart pattern is to play it when it breaks the key level that is near. Okay. Because if something has a chart patterns are psychological. To a certain extent, they're not even real. They have value because we give it value. What has more value is that key level. That's what people don't tell you. And that's what it took me years to understand is yes, you see the chart pattern, but that level is everything. How many times have y'all played a chart pattern and it might have faked out? You probably played something like that. You might have had something like that this past week. But there's another way of entry that has a higher probability of being right. So just to kind of review, you want to use the daily and 4 hour time frames to find what you are going to day trade. Because when you have these big moves, let me pull up. Let's go ahead and start doing some visual. It'll make more sense. Let me see. It'll make more sense in just a second. Watch this. Let me pull up Nike. Let me show y'all this. Okay. Guys should be able to see my screen in just a second. Let me know whenever it pulls up. I'm about to make this make sense. Y'all let me know in the chat whenever it comes up or whatever. All right, cool. So we know that Nike has been on a run. All right. So think about the first day that Nike broke out last week, right here. This is what you see. Think about the mountain in the field. From the field, this is what you see. You see it running, right? You just see it running. That's what you see on the smaller time frame. But from the larger time frame, guess what you see on the larger time frame? On the larger time frame, you see bullish divergence on the daily chart. You see bullish divergence and you see a key level. None of this right here, this has been here for weeks for me. I missed it. I wasn't paying attention. These same levels have been here for weeks for me. Okay. Now you can always day trade a large breakout. You can always be ready for these plays if you can find a pattern or a key level. And if you can find both, those are the plays that you want to have as your A plus setups. This has a bullish divergence with a hard key level. And the trick here is how much room does it have to run? That's the trick. You don't want to play something that doesn't have any room to go. You notice that I had definite breakout right here at 75.27. So from 75.27 to 79.08, you have nothing but room. And you have to ask yourself, is a almost $4 move enough for me to make a profit on Nike? The key is on Nike. Because a $4 move on Nike is a lot different than a $4 move on SMCI or a $4 move on Bank of America. It's not the same. All right. So a $4 move on this is a lot. A $4 move on SMCI is nothing. Okay. So not only do you have this $4, you also have a gap that goes all the way above 90. What do you need when you're trading options? You need room to run. And you need it to run relatively quickly in your favor, especially when you're talking about day trading. Remember, we're just talking about day trading today. You need room to run. You need room to run relatively quickly. So kind of going back to what I was talking about with the field and the mountain to tie this in. From the field, this is what people see. From the mountain, you could see this coming because you know on the larger time frame, this move was already brewing. So this move intraday that you're seeing that just shot straight up is a byproduct of a breakout on the larger time frame. That's the whole methodology to my day trading is you are catching the daily chart in 4-hour moves, but we're just trying to catch them on these smaller time frames. You are preparing yourself for this move on the daily by catching it on the smaller time frame. How do you find it on the daily? You look for those stocks that are near the key levels like this. You look for that bullish divergence. You look for that bull flag on the daily chart or the 4-hour. You look for that triangle pattern on the daily chart or 4-hour. Those patterns on the larger time frame are preparing you for a huge breakout on the smaller frames. Okay? And think about it. If you know that Nike has room to run from 75 potentially all the way to 90 plus, somebody put in the chat, what's stopping you from day trading that every day up to 90 plus? Or if you wanted to swing trade it, nothing's stopping you from doing that. But if you just wanted to strictly day trade, what is stopping you from day trading is every day up to 90 plus, as long as the conditions are right? Nothing. Nothing at all. Nothing is stopping you from day trading that. all the way up here because you know you have room to run. That's the number one thing you need in day trading. You need room to run. Sideways action kills us in options. We don't want to play anything that is sideways, which is why you don't want to touch Nike up in here. You want to touch it after it breaks out, but you have to be ready for the breakout. Okay. So, before we kind of get into the entries and exits, I wanted to take some time to really talk about how do you even find what you want to enter and exit on. Let me know if this makes a little bit of sense, or let me know what doesn't make sense so I can clear it up. If you want to ask, if you want to do the raise your hand thing, I can unmute you and you can ask a question or you can drop it in the chat. I kind of wait a minute or so if anybody want to ask questions before we start talking about entry, because you have to know what to enter on. You need a pattern or key level or both, and then you need room to run relative to the stop. A $3 move on Nike is not the same as a $3 move on SMCI. So y'all let me know if you got any questions or if it makes sense. We got one makes sense. Now y'all should know me enough by now to know that this class wasn't gonna be strictly about, oh, just show me the strategy. Now I gotta show you why it works first. I gotta show you why it works.
Just a quick question. Now, when you're comparing the SMCI with the Nike and $4 difference between both of them, that's called price action, or is price action something else?
Now the $4 move, I'm just saying, like, in general, a $4 move on SOCI is not the same as a $4 move on Nike, in the sense of, on Nike, if you go look at the contract prices for Nike and compare them to SMCI, think about, let's say you had $500 put into a trade. Think about how many contracts that you could get of Nike, a decent contract with Nike and a decent contract with SMCI. How many contracts could you get? And what kind of move can you get with a $4? You know what? Let's do it now. I can do it now. I kind of make more sense. I'm finna use Robinhood to kind of show y'all this example. That's an amazing question. I'm glad you asked it. I was hoping somebody was gonna ask that actually. What do I mean by it's a difference between that $4 move? Let's say I have $500 to day trade, right? And that's per day trade. I use $500. If you look at SMCI on the weeklies, a contract that is at the money for a call is $23.50. So let's say you got $500 to day trade. You're going to have to get a 700 call to even be able to play SMCI, which is $80 out of the money almost. All right. So now you're $80 out of the money. The delta is a 14 and a theta is $116. So on a $4 move, you will make around 14 times 4, 56, close to $60. And that's if it happens relatively quickly. You have 116 theta. So if that kind of plays around, that theta is going to be eating at your contract. Now, this isn't a class about the contracts, but this is just to show you a $4 move on that with $500 may make you $60 if it goes there relatively quickly. Now, let's say we got $500 to day trade Nike and it goes up $4. Okay. At the money, you can get a in the money call on Nike for $133. But let's say you're going to go a little bit out of the money. Let's say you're going to get an 85 call, right? An 85 call has a 28 delta and a 8 theta, and it costs $51. So $51 per contract, 500 divided by 51, you can get 9 contracts. Okay. Now watch this. You can get 9 contracts of that with $500. The delta is 28. 28 times 9 because you have $500 worth of contracts. You have 9 contracts. That gives you a 252 delta. That means you will make or lose $252 per $1 move on Nike. So watch this. That $500 with a $4 move on SMCI will get you $56. A $4 move on Nike with the same $500 will make you $1,008. The same $500, the same as that $500. And why is that? Why are the contracts priced so differently? Because SMCI is a lot more volatile. SMCI moves a lot more. Nike is not super volatile. Nike is not a huge mover. That's why if you guys were seeing Nike a few days ago, those contracts was up like crazy because Nike usually doesn't move $3, $4, $5 in a day. Okay, so I hope that kind of makes sense a little bit. Kind of makes sense a little bit. But the thing is, it keeps going back to you have to know when those kind of moves are happening. When are those kind of moves happening? When you see those setups on the larger time frames. You use those flags, the key levels from the larger time frames to let you know that the good day trade is coming. From that point, all you got to do is be patient. Okay. So I hope that made sense a little bit on the $4 move here is different than the $4 move on something else. I hope that kind of made sense a little bit. Say, can you briefly explain how the Greeks work? Yeah, I'll quickly explain that because we got to get into the entries and exits. Okay, so um basically the two main things you need to pay attention to is the delta and the theta. Okay, so delta tells you how much you're gonna make or lose per contract that you have per dollar that the stock goes up. The delta is a 30. That means you're gonna make $30 or lose $30 per contract that the stock goes up a dollar or down a dollar, depending on which way you bet. The theta is the tax that you pay every single day, regardless of anything. You typically want your theta to always be lower than your delta. But sometimes on day trade, especially when you get into like Wednesday, Thursday, Friday, it's not always like that. But you typically want to have a higher delta than theta. All right. That's really like the main thing with contracts, delta and theta, and volume too. But if you trade things like Apple, SPY, Nike, I mean, you won't really run into a problem with volume. You really run into problems with volume when you start trading like penny stocks and things like that, which I really don't recommend. But I hope this kind of makes sense. I hope this kind of makes sense a little bit. Let's get into what y'all want. No, y'all don't want all the background stuff, but I'm telling you, it's important. That stuff is super, super important. You're gonna wish you paid attention to it. But let's talk about the actual entry and exit. Because I know that's what y'all want. Let's see. I think I'm on good time. Yeah. 11:30. Yep, still on good time. Okay. The actual entry and exit. The method of entry and exit is the break and retest strategy. Okay. So, what do you need to understand to trade the break and retest? Number one, you need to understand candlesticks. You don't understand candlesticks, you won't understand how to trade the break and retest. Number two, you need to understand levels. All right. Candlesticks, understand levels. You need to understand the super basic form of market structure. And I'm not talking about getting into all the breaker. And I ain't talking about all that. You need to understand higher highs, higher lows, and understand how to see when that is not the case anymore. That's what you need to understand. Okay. And besides that, you just need to understand when to use it. When do you use it? Stuff like this example right here. Okay. When you have those setups from the mountain that you can see from the mountain down to the field, that's when you have to start using it. All right. Now let's talk about the actual strategy itself. I'm just going to use this as a little example just to kind of show y'all. Let's see. I'll type it out. What you need to understand. Candlesticks. Number two, you need to understand key levels. All right. Number three, basic market structure. Now, remember what I said at the very beginning of the session. I said any strategy is based upon the basics. Any strategy is a compilation of basics. Does everybody agree that candlesticks, key levels, or if you don't know what key levels are, you might be a little confused. I always use this term interchangeably, but if you don't know what key levels are, it's support or resistance. Does everybody agree that these three things are basic like concepts of trading? Does everybody let me know who agrees with that? Let me know if you agree that these three concepts are basic trading concepts. Say agree, agree. Okay. All we're doing is putting it together and making a strategy. That's it. You have to I'm telling you, I can't explain to y'all enough how important the basics are. I don't do anything hard. I use very basic things. This is all that you're using for the break and retest. That's it. Using candlesticks, using key levels, using basic market structure. That's all you're doing. That's it. Nothing more. All right. So to kind of give you guys a example here, let's say, and we'll use wherever we at right now, right? So this has nothing to do with Nike. This is just for the sake of example. Okay. This is just for the sake of example. And then I'll show y'all a real example that actually worked to the T yesterday. Let's say Nike had a key level, right? That you was looking from the mountain down to the field. So you was doing your top-down analysis and you seen, I'll draw it out for you. Let's do that. You seen that Nike had a bull flag on the daily chart. You seen Nike had a bull flag on the daily chart. Okay, so let me ask y'all this. Y'all, what does a bull flag tell you? That what is more probable to happen? A bull flag tells you that it is more than likely to go up than down if it breaks out. Okay, it tells you that the probability is higher that it's going to go up than to go down. All right, so boom, check this out. You see the bull flag and you also see a key level right here. Okay, so you see the bull flag, but you also see a key level right here. The question would be, well, where do I enter? You could enter here right when it breaks the bull flag, but I will tell you this from experience, the safest entry is going to be that key level. So let's label this and let's say that this was the key level from the daily chart or even the 4 hour, could be either one. Let's say that this was a key level, like it's been hitting this and it could not get above this. Yes, it breaks out here, but the definite breakout is above here. And let's say your next key level isn't until, let's say 113.4. That's the next key level. That's the next key level from daily. So we have a bull flag. We have a level at 109.90. And we know our next key level isn't until 113.54. What are our basics that we're using to even find this play? We haven't even got to the entry yet. What are the basics that we're using to find the play? We have a chart pattern. That's a basic concept. We have a key level. That's also a basic concept. And what else do we have? What did I say earlier? You need, for a day trade, you need room to run. Don't forget that part. You need room to run. Okay. 109.90 to 113.54. If I could do some quick math, that's a little bit less than $4. I just showed y'all what a $4 move can do for you with $500 on Nike, if that's your trade amount size. So it's no question that is this enough room to run? We know it is. All right. So if you see this on the daily chart, how do you enter and where do you plan to exit? Okay. I'll give y'all a little secret too. When you see a flag pattern, a target on a flag pattern can always be at the top of the pattern. So that's another little tidbit that I can give you. A key level can always be the top of the flag pattern. Okay. So even if you want to take a little bit off of it and say you want to only aim for the top of the flag pattern, which I'm saying is right here, that's still a little bit less than a $3 move, which is still enough to make money on Nike. All right. So the question is, where do we enter? You're aiming for an entry here. Okay. So when you start to look from the smaller time frame, oh, now I gotta find. Uh-oh, let's see. Let's see if I can find it. Oh, that's why I can't find it. I'm way past it. Okay. All right. Okay. All right. So I'll show you this first, then we'll go back to the 1 minute. So basically, when you're looking at the 1 minute, here, when we come down from the 1 minute and we start to look at this key level, because I said to trade this breaking retest, you need to understand candlesticks, key levels, and basic market structure. When we start to go down to the 1 minute, when we start to get to this level, you're not only breaking a pattern, but you're also breaking a key level. Two things. You're breaking a flag pattern to the upside. You're breaking a key level to the upside. And let's also throw in, this is also something that it took me years to understand this. Man, we're dropping some game the other day. It took me years to understand this. Always check to see what QQQ and SPY is doing. If SPY and QQQ are also bullish, this has a even higher chance to go in your favor. Only trade the stocks that are trading in the same direction as SPY and QQQ. Let's say SPY is breaking the key level. Let's say QQQ is breaking the key level. And then you got Nike about to break a bull flag. So not only do you have this flag pattern on Nike, not only do you have this level break on Nike, you also have SPY and QQQ already bullish. So what in this is telling you to not be bullish on Nike? Nothing. Can you still lose the trade? Yes. But what did I say at the beginning? We have to shift our mindset from I have to win every trade to I have to keep executing the trades that look like this. Okay. And not saying that you only have to trade flag patterns, but I'm saying the trades that look like this are the trades that have multiple of the basic concepts telling you the same thing. What's an example of this the other way? If you have a bear flag and you have a support being broken, those are basic concepts being put together telling you that it's going to do one thing the opposite direction. So the type of trade is the concepts that are going the same way. All right, let's get to the strategy because I'll be talking about that all day. Let's get to the strategy. Okay, the breaking retest, like we said, you need the candlesticks, you need to understand the basic market structure. Um, Candlesticks, the basic market structure and the levels. Okay, so imagine, let's say, let's say one day we notice that Nike is getting near this 109.90. Okay, and we know that when it gets to this point, it's already breaking out of the bull flag. Now, what we're doing now to day trade is we're trying to see, is this really going to break out or is it going to fake out? So let me ask y'all this. How many people have bought calls just because a stock has hit a certain number and then it tanked? Let me know if you've ever bought calls because a stock hit a certain number and you lost. I'm sure it's happened to everybody because I know it's happened to me for sure. Okay. We can't do that. That's a no-no. That's like the biggest no-no, especially in day trading. You want to have confirmation. The confirmation that you already have from the larger time frame is the flag and the level. The confirmation from the smaller time frame is the break and retest. So what do you want to see? You want to see Nike break this, come back and retest to take it higher. Okay. And what levels can you be aiming for as upside? As far as the levels that you aim for key levels, or you can aim for the high of day. Those are pretty much my two targets. You're aiming for key levels, you're aiming for high of day. First, you always aim for high of day. All right. You aim for high of day first. And then if you get the high of day, you trim and then you start aiming for the key levels. But what does the break and retest actually tell us? The break and retest tells us that yes, this broke, but when it came back down, this gives us a lot less chance of getting faked out if we see certain things right here. So this is the level that matters to us. We want to see it break this level, and we want to see the buyers be strong again in this same exact spot. Because that tells us that, okay, maybe they're not faking. Maybe they really do like it right here and they want to keep it pushing up. So a question that you're going to get is, number one, the most important question is, where do you stop out at? You know what your targets are, but where does it not work? So there's two methods of when the break and retest doesn't work. Um, but first we'll start talking about what you actually want to see. So when we talk about our basic concepts, when we see our break and we're looking for indications back at our level that tells us that the buyers really like it. What type of candlesticks do you think you want to see right here that tells you that buyers are strong? What type of candlesticks tells you that buyers are in strong? And if you can't answer this question, this is exactly why the basics are important. We're doing nothing but the basics. What type of candlestick tells you that buyers are strong? Hammer or engulfing? There you go. Bullish engulfing. Large green candle. Bullish engulfing. Exactly. You want to see hammer candles. You want to see engulfing candles. You want to see big green candles at your level. That lets you know, okay, the buyers actually may like it here. Okay. Because you can still lose. And we're going to talk about where you take the loss in just a second. Okay. That gives you the green light to get in the trade. You get in the trade when you see that hammer or wherever you see the buyers get back strong near this level. Okay. Your target, high of day, next key level. Because be completely honest, Nike can get from 109.90 to 112 in a day, but you best believe that, it's going to be hard for it to do it. So you're not going to always get that next key level, but definitely always have your, for me, a method I always like to use when I get my high of day, I kind of like to start trimming when I get like the 20%, 30%, 4%. Like I do it in tens, then I just kind of keep runners. But that's the way that you do it. Okay, so you want to see those hammer candles and those big green candles on your retest. That lets you know that the buyers are strong. If it was the opposite way and we're looking to play puts, we want to see bearish engulfings, bearish hammers on the break and the retest of this to take it lower. Okay, so it's literally the exact opposite when you're in puts. Okay, but we're just talking about calls just for the sake of today. Okay, so we want to see those type of things. We're aiming for high of day and next key level. One thing that you have to always make sure of is that you understand the structure, right? Because the market moves in higher highs, higher lows. So you will hardly ever see something just doing this. As y'all know, stock's gonna do this right here. Just for example, y'all know the market kind of moves like this. It don't move straight up and down. So what you have to understand, another basic concept, the basic structure of the market. This is making higher highs right here and higher lows. Every time it's getting lower, this low is higher than the previous low. This low is higher than that low. This low is higher than this low. So when you see, let's start putting this together. When you see your candlesticks right here, you already have your pattern. You already got your key level. Now you're using the basic market structure to tell you where this trade doesn't work no more. This doesn't work if it breaks this previous higher low. That's one way. That's one way. If it breaks this previous higher low, this is where you say, okay, I accept the loss. All right. If it breaks that previous higher low, that's where the trade no longer works. You got to be straight with it. And for me, I do if the candle closes. Okay, so I usually do the break and retest on a 1 minute chart. Some people do it on a 5 minute, but I like it better on a 1 minute. If I get a 1 minute candle close below that previous low, that's where I stop out at. Has to close below though. If it doesn't close below, I'm in. Okay. It says, do you draw trend lines? Not usually with my higher highs and higher lows, just because I can usually just see it, but it doesn't hurt to do that. It doesn't hurt to do it. So it really wouldn't hurt to kind of do like this. But the problem will come, whereas let's say that this kind of breaks down and it gets right here. If it gets to this point, it has broken that trend line, but you're technically still in that same structure of the market. It hasn't broken this higher low. So it could come all the way right here. It broke the trend line, but it's still bullish. Hasn't broken this. That's why I'm always strict with the lower high, higher low. So that's one way to see where it doesn't work anymore. Simply that right there. The previous higher low. Another way to see where it doesn't work anymore. Let's say you have a huge green candle, right? So let's say you got a green candle that ended right here. All right. Now, something that's also important is making sure that the trade makes sense. So if you don't know how to use the long and short tool, I won't go over that in the class just because I kind of want to end it by 12, so everybody can go. But look up how to use the long and short position tool so you can find out your risk to reward. You always want your risk to reward to be a 2 because the trade has to make sense. Let's say you have a huge green candle right here, right? So the second way that you can do a stop out is under that key level. Okay, under that key level. So let's say you have a huge green candle and you decide to enter right here. Let's say that this is where the entry is. Your first method is to take that previous higher low, which is down here. You want your risk to reward always be at least a 2 for what you're aiming for. So let's say you were aiming for high of day. You had a huge green candle right here. Your risk reward is 0.78. That means you're targeting a 39-cent profit, but your stop loss would be 50 cents below. That's not a good risk to reward. Now, that second way of doing it, it may be a little bit better, but it still may not be worth it. This key level, if it has a huge green candle, right, you can do under that key level. All right. So here it's a 1.3. It's still not worth it if you're just aiming for high of day. Now, us knowing that we actually have room to run all the way up here, of course, you don't want to put all your eggs in one basket of this doing this in one day. But this still makes sense because this would actually be your target, but you would still want to keep your stop loss under this key level. Okay. Now I'm not really gonna get into the risk reward stuff in this class. Maybe we can do another class on the risk to reward. But for the break and retest, the candlesticks, the basic market structure, the key levels. Okay. When you're looking for calls, you're looking for it to break, for it to come back down and retest. On the retest, you're looking for those bullish hammers, bullish engulfings, things of that nature. Your targets are always going to be, for me personally, my targets are always the high of day, then my next key level. Okay. Now, you can also use, before we got to go to that, let me know, does this make a little bit more sense as far as an entry? Okay. Entry doesn't make sense as far as what we're looking for to get in the trade. Does it make sense of what we're looking for to get in? Say it makes sense. All right, cool. Does the exit make sense? The exits are always under the key level or the break of the previous higher low if you're looking for calls. Okay. The stop loss is always under the level or under the previous higher low. That's it. You got to be strict with that. You can't say, oh, well, it might. Don't do it. Don't get no hope. Just follow the system. Because what I say earlier, shift our mindset from I have to win every trade to I have to take every trade that looks like this. Notice how we've been talking about one example the whole hour. We literally have only talked about Nike. We've broken Nike down from that example I gave you, from the daily chart to how we would enter it on the 1 minute. That's all we're doing. Say you set your stop loss or manually execute exits. If I'm able to watch it, I manually do it. But if I'm not able to watch it, then I do a conditional order on my option to have it to sell if it gets to a certain point. Because at that point I can't watch it. So I just, if I was to say that my stop loss was a close below here, I would say I would put my stop a little bit under that. Like if it hits 109.6, then just take me out of it because I can't watch if the candle closes. Now this is something, I'm glad you asked that because this is something else too that's super important. When the trade starts going your way, all right, and let's say you know you start to win the trade, whatever, it's still making the higher highs and higher lows. You just keep moving up your stop. First, your stop, let's say if we was to bring it here, or something like that. Let's say your first stop was here. It made a new high. Your stop is now here. It didn't break this low. You still in the trade. It made a new high. Your stop is now this one until it makes a new high. You literally, you just keep moving. You keep moving along. Every time it makes a new high, that previous higher low is now your stop. Okay, you have to keep moving it. You have to keep moving it. Let's say if Nike was to get all the way up here to 111, you wouldn't want your stop to still be way down here because you're day trading options. The theta is going to start kicking in, right? And you just don't want to lose all of that profit. So, you know, I do my stop losses and exits, things like that by the charts. I don't really do percentage stop losses. I don't really do that. I do everything by the chart. So that's just the way that I personally do it. You keep moving your stop. If it keeps making that higher lows, higher highs, you keep moving it that way. Um, but dang, I forgot what I was going to say. What was I getting into? How did I even start talking about that? What was I about to get into just then? Now I got to think because that just threw me off because I forgot to mention that earlier. It's gonna come to me in just a second. If y'all know what I was mentioning right before this, please let me know. I just had a brain fart right there. What was I just saying right before this? Yeah, yeah. So we broke Nike down from top to bottom, showing how you go from that larger time frame down to the smaller one, how you enter down on the smaller one as far as the entry, what you're looking for in the exit. Yes, that's what I was doing. So I was asking, did the entry and exit make sense? And you guys were saying, yes, it did. Um, okay, cool. So you're saying that makes sense. Now, I did want to show an example, a live example, and this one actually was perfect on Friday on Tesla. So I had two entries on Tesla. I didn't even take the third one, which the third one was actually the best one. Um, First two entries I took on Tesla, one was actually just a kind of like a YOLO because I felt like Tesla would run because it's been doing that the past couple of days where it had a just a run at the beginning, right? So yeah, here didn't do it this day, but it did it here as well. So I felt like Tesla would run early, so I just took that one at open. The second entry that I had was after it pulled back a little bit, kind of formed just a little bit of a little flag pattern right here. And when it started to break out, I just took it to the key level. Now, let me break down Tesla and show you why you should have been watching Tesla and where the entry was. Watch this. Watch this right here. Tesla, I'm going to remove all this because I don't need it right now. Tesla, right here, this is a daily chart from the mountain down to the field. Tesla right here, this is a setup on the larger time frame called the three-touch rule. Usually, when something touches the trend line for the third time, you expect it to continue in that same direction. So boom, Tesla had the setup on the larger time frame, three-touch rule, the pattern. You got the pattern. The level, okay? When I was looking at Tesla here, now this is something that I didn't get into today, but I like to call the elevator setup. When you have just a straight drop or a straight pop, it usually goes down and it goes back up in the same manner. But to kind of show you guys why you would even be watching that is because Tesla was on the third touch of this trend line and you have room to the upside. So you have these days right here just straight drop on Tesla. So when it goes back to the upside, it can move in the same type of way. Now, thing about Tesla on Friday, right around here is where I was looking at for Tesla because watch this. There, all up in here. Here. Three places where Tesla has struggled. It has either been a support or a resistance right here. So this tells me if it goes above this point, I expect it to go. How far can I expect it to go? And this is an example of you may have a lot of room to run, but that doesn't mean it's going to do it in one day. Tesla actually has room to go all the way back up in here because this is what I call a elevator setup. And there's plenty of examples of this in the chat if you want to go back and look. Look at all of these straight red candles. Whenever Tesla starts going, it's gonna eat these up. I can almost tell you Tesla's gonna eat these up whenever it starts going. You may have a pullback, but when it starts going, it's gonna eat these candles up. Okay. So Tesla has a lot of room to run if it can break this level. Think about what we're doing. Basic concepts, levels, three touch rule. And these are from the larger time frames. So how do you trade it on the smaller one? You come down to your smaller one and you already knew where your key level was on Tesla. You knew your key level was right here because it was already there from the past. All right. So midday, I'm thinking, okay, Tesla, and just to kind of show y'all right here that I'm not telling y'all a story. Right here, if you go back into the chat and you look at yesterday, I didn't take the break and retest. I had already took Tesla twice. If you look back into yesterday, 936, I said, but here is the spot to watch for Tesla. 216.17. So my thing is just a little bit down, move it back down to exactly where I said 216.17. Let's see what happened at this level. So I showed you guys why that level was important. Now, how do you play it? 216.17 right here. Let me break and retest. What do we see? Look at the structure of this. You got your higher highs, higher lows going, right? Boom, boom. Okay. We know Tesla has room to run all the way up there. Doesn't mean it has to do that today, but we know Tesla has a lot of room to run. Tesla broke the level. Don't chase that up move because odds are when you chase, you're going to get scared when it pulls back because you don't understand that it's going to come back and retest. 9 times out of 10, the stocks are going to do that. But what do you see here? You see this push below, but you see the buyers start pushing it back up. The buyers are back in. Either one of these candles could have been your entry. What are you targeting? High of day. Once you get your high of day, you can use either your percentages if you want to, that's how you do it, or you can use the market structure to be your advantage. So if you wanted to get in here and you want to say you wanted your stop loss to be here, that's fine. It ran. So technically, this thing ran break and retest, perfect break and retest, and ran all the way up to 219.79. So technically, as far as how this is going, you really should not have been out of the trade at all until right here. Because when you start talking about the higher highs, higher lows, higher low, higher low, higher low, higher low, this would have ended up being your stop. Close below this is where you get out. If you didn't have levels here, that's how you have to do it when you have a huge place to run. Because who knows if the market would have been super strong, Tesla maybe would have kept running. But that's how you stay in the trade as long as you can. It's the market structure. That's how you stay in the trade as long as you can. So this is an example of the break and retest working to perfection. And there's plenty more examples in the chat. If you guys want to kind of go through it, I post it almost every time I take it out. I post why. So I hope that kind of made sense. I know I wanted to do this for like an hour. We kind of went over a little bit, but y'all that know me, you know, once I start rambling, I be going. You say I set conditions based on the stock price, percentage, or contract price. When I get in, I usually just get in like so on Webull it says like bid ask mid. I just get in at the mid. And then when I'm trying to get out, I usually just get out at the bid because the spreads on the contracts aren't bad at all. It seems like one of the best moves to play once you add the basics. Yes, it definitely is. Notice here, I'm not using the chart patterns to get in. I'm using the chart patterns as my probability, right? I'm using the chart patterns for my probability. Okay. Tesla, the three touch rule, that was your view from the mountain, using your levels and stuff from the field to get in, using your basics to stay in, your targets, your entry, your stop loss. The basics are how you stay in and how you use what you see from the mountain. Is all the basics. I promise you, it's nothing but the basics. Um, let me let me know. Does the breaking retest make a little bit more sense? Does it make a little bit more sense? I'm about to get into the questions that y'all asked on the Google form. I hope this made sense. And like I said earlier, this is recorded, so you don't have to worry about that. Let me pull up the Google form so we can answer those questions too. I don't want to forget those. So I wanted to do like an hour, but we're a little bit over time. It's fine. Let's see. Where we at? Questions. Here we go. All right, we got some questions. Hope that kind of made sense a little bit. Okay. It says, why are pre-market highs and pre-market lows important? That's a great question. Pre-market highs and pre-market lows can be important because they can also act as a area of interest as far as the break and retest for me. So let's say that's such a good question. I got to show you an example. This is an example of how you could possibly use the break-in retest with the pre-market highs and pre-market lows. Let's use Nike. Let's go back to Nike. Use that same example because this is something that you're going to see. I guarantee you, it happens all the time. Let's say, for example, you know that your key level is right here, 109.9. Now, let's say that Nike opens up one day and in pre-market, your pre-market high, is right here. Let's say this is your key level. This is your pre-market high. This is still your target. But this is your key level. This is your pre-market high. And let's say Nike opens up in the middle. Nike opens up at 110. What do? You in between two levels. In a case like that, you use the pre-market high because it's already broken this 1 day level. Okay, so if you have that pre-market level that's already above your daily, just use the pre-market high for the break and retest. Okay, so the pre-market high, pre-market low is still important because they can still act as a key level of interest depending on where things are in the grand scheme of things. All right. Let's see. Do you use volume as one of your indicators for an entry on a day trade? I used to. I used to use it a lot more than I do now. I think the biggest way that I use volume now is kind of watching it on pullbacks. So you on pullbacks, I want to see low volume, right? So when you see high volume on pullbacks, that kind of lets you know that hey, maybe this ain't just a regular pullback. So I mainly like to use volume more so on pullbacks now than anything to kind of give me a gauge on okay, is this really, a pullback or is this, it might be the start of a little sell off? Because if that volume is super high on the pullback, it's not really a good sign. So that's how I kind of use volume. I used to enter off of um the candlestick having high volume, but I kind of got away from that a little bit. Can you briefly go over the concept of lower highs and lower lows and higher highs, higher lows? Oh yeah, we did that. Cool. How have you balanced your trading from long-term investing? Is there a period where you see yourself doing one more than the other? I'm actually trying to start getting into long-term investing a little bit more. I'm actually trying to start getting into that a little bit more. 9 times out of 10, I just do trading, like straight options. But I am starting to try to get some long-term things. The thing about long-term is you just don't want to buy at a stupid place, right? So a lot of stocks right now, well, a little bit different right now, but a lot of stocks aren't good buys because you don't want to buy at the tip. You want to buy at the dip, right? So you want to buy when these things drop. Most of these stocks are relatively at the highs, besides like Tesla and you got a couple more, but most of the stocks are near highs, like Apple's near highs, Meta's near highs. Like it doesn't make sense to buy them right now. You have to wait on those extreme dips to really get long term. So the next huge market dip, I'll take that more serious. So yeah, for sure. Now there are some things that do look pretty decent in my opinion. Um, One that I'm actually looking at for long term. I'm actually looking at this one. And I forgot to mention that, so I'm glad you said that. My mind be going 1,000 miles per minute. Um, Let me see. I'm gonna share my screen again. CELH. So this is Celsius. Um, Celsius, they make those Celsius drinks. So this is their stock. So I actually am kind of looking at this because I'll tell you why. Notice we talk about the break and retest on the larger time frames or on the smaller time frames, but it works the same exact way. It works the same exact way on the larger time frames. So this area that Celsius is in now, this was the previous resistance in 2022, turned it into support in this area in 2023. Now we're back into it. So if I was wanting to add long term, this is the spot. You breaking and retesting. Same exact thing. All right. And now we also started adding, like Steph said, you start to also add in things like the 200 MA. Whenever this comes up, hopefully it comes up in just a second. Because I've already looked at this, but basically, whenever this pops up, you're gonna see that Celsius is right at the 200 MA on the weekly chart. So now think about our basic concepts. Once again, basic concepts. You have the break and retest. One, retesting a level. You also are right at the 200 MA on the weekly chart. Whenever this comes up, you will see it. Or if you guys can put it up on yours, you'll see that on the weekly chart, CELH is at the 200 MA, which the 200 is also a area of support or resistance, depending on where it comes from. So those things put together, I kind of start. I kind of like this long term. So I'm actually kind of looking into possibly building a position that is for long term. I have to check the financials and all that in depth, but chart wise, yeah, this is the spot to kind of buy it chart wise. I probably will get into a swing in this not too long from now. So definitely be on the lookout for that. But yeah, that's a great question. Great question. I'm starting to kind of look at some more long-term stuff. But it got to be the right conditions. It says which patterns do you use them on smaller time frames to make decisions on entries or simply the bigger time frames that you expect to move? Yep, that's kind of what we talked about too. So with the patterns, I mainly use those as my direction, right? So if I see a bear flag, I know I'm looking to trade this to the downside. Now, when I go to my smaller time frames, I'm looking to do my break and retest. I use my larger time frames to find the pattern and the key level that I need to watch for, right? So that pattern gives you the direction. From the direction, You need the level. From the level, that's when you use the break and retest of the level, given the direction. If that makes sense. It says, can you show more examples of break and retest strategies? Yeah, let me see. What was the There was another one that we did not too long ago. Let's see if I still got it in the chat. Mm-mm. I have to find another example of the break and retest, but that's pretty much the method of entry. Oh yeah, I actually had one the other day. I forgot. NVIDIA. NVIDIA is another one that was the break and retest that we had from the other day. What day was that? That was 8/13. That was the 13th of August that we did the break and retest on NVIDIA. What level was I looking at there? 113.62 was my break and retest area. So let's see, why did I have that? 113.62. So 113.62. Let me see if this was something from the larger time frame. Okay. Yeah, so looks like that 113.62 was an area from the larger time frame that I was targeting. You can see all up in here, all up in here, all up in here. 113.62 was a monster. Okay, so you go to the 13th. Now this gonna be the last example. I'll let y'all go. So we are kind of over what I was planning on doing. I'm gonna take up all y'all day, but 113.62 was the area, right? That was the level. Look at what's happening. Took my entry on this right here. It actually was a little bit below the level, but I'm gonna tell you why, or I'll actually ask, can anybody tell me why I got in right there? This was the level. We broke it, didn't chase. It was doing all this, it went all the way up, didn't chase. I didn't get back in until this candle. What about this candle made me want to get in? What looks good about that candle? Oh man, I don't even think y'all can see my screen. Hold on. Y'all might not even be able to see my screen. My bad. There you go. 113.62 was the key level right here. I didn't chase. Didn't chase any of this. I got in on this candle right here. All right. So first I'm gonna ask, what made me get in on this candle, do you think? What about that candle made me want to get in? If you had to guess. Hammer. Yep. Hammer right at the level. Where do you guys think I was planning on stopping out? It's two ways. Remember, it's two ways that you can look to stop out. One is you can do it under that retest candle, or you can do it when it breaks that previous higher low area. So this previous higher low area is right up in here. So you can do your stop loss under this candle, or if you're looking for a larger move, you can do it up in here. Okay. So either way, stop loss is here or under here. Targets is always high of day. And then if you have another level above, you can take it higher. So you ended up getting pretty much this was really a perfect trade. I ended up taking the profit at high of day here. And it ended up, it was like a, let's see. I think this ended up going like 30%. I think I put the picture in there. Yeah, so went 30%. Yep. So 1043, I was like, safe first TP is high of day. And that was at 1043. 1043, where was it? That's when I said this. All right. So we end up hitting high of day and I end up selling there for 30%. That's the break and retest. That's another example. And I promise you this happens all the time. But you have to understand why. Why was that a area of the break and retest? It's for previous levels on the larger time frame. And if you go back even larger, why was Nvidia even on the watch list? Nvidia had the same exact thing that is at CELH has right now. Look at this area for Nvidia in the past. This was a clear resistance. All we did was break and retest this daily chart, and Nvidia has broken out again. The break and retest isn't just on the smaller time frames. You can use break and retest to swing trade. How similar does this look to this right here? Huh. So this looks pretty similar, right? I'm expecting a little bit of the same, possibly. So yeah, that's another example. That's another example. All right. That was the questions that y'all had left. A lot of them we had kind of answered. I know a lot of y'all put them in kind of like before, but we kind of answered it during the thing, which is actually perfect. But yeah, that's what I got, man. I hope this was informative in some kind of way for y'all. I'll stay on for a few minutes. If anybody got any kind of questions at all, and y'all want to do the unmute thing, I'll stay on for a few minutes if anybody got any questions. But besides that, that's what I got. I hope this kind of makes sense. Entries and exits, that is literally the formula. That's the formula. So if y'all got any questions about anything, feel free to do the raise your hand thing and I can do the unmute so y'all can ask a question. But if not, that's really what I got for today. If y'all can, man, if this was informative, please leave a review thing in the little testimonial tab. That will help out a lot. Um, yeah, I appreciate y'all hopping on, man. This is going to be recorded, so it's going to be posted. I put it on YouTube or something, so don't worry about that. I appreciate y'all hopping on. I'll stay on for a few more minutes if anybody got any questions. But if not, I appreciate y'all and I hope y'all have a great day. No problem. Oh yeah, no problem. No problem at all. All right. If nobody got no questions, man. I hope y'all have a great day. As soon as this thing gets done, loading up to the computer, I get it put on YouTube. So appreciate y'all, man. Y'all can drop a review, little testimonial thing in the tab, man. I appreciate y'all. Hope everybody have a great day. Signing out.